Excellent. Okay, so I will try to give you a little bit of a practical insight in what's happening in the market at the moment, and what our clients ask and what questions reach us in the law firms. So let's see where so okay, so so I can only give you the German point of view, but I think that is probably similar in other member states of the European Union. So we have an already existing regulatory landscape, and we also have lots of IT requirements already implemented in the financial market. And then comes DORA. And in the beginning, I would say that market participants were not so very excited about DORA. I think a few already started to do gap analysis and see where they stand with DORA, but I think lots of market participants have not started, and they do not still get the vast scope of DORA. So on the EU level, we have, of course, MiFID, and in the investment firm regulation, we have then for the banking sector, CRD and CRR, we have for the fund sector, lots of requirements, and for the payment sector, we also have lots of requirements. And all those EU level regulations are implemented in national laws. And then on top of this, we have a lot of guidance from the ESAs, but also from the national competent authorities in Germany, that's BaFin. So we have IT requirements in MA-Risk already, and we have a whole set of IT requirements here in the BAIT for the banking sector. We have this for the payment sector, we have this for the fund sector, and also for the insurance sector. So, and if one of you had a look in this specific BaFin publications on IT requirements, you can see it is there is a lot of it there already, and they speak a little bit a different language than DORA. And the challenge for the market is actually to try to get the DORA framework on top of what there already is. And the IT, I would say the IT infrastructure, there are some market participants who have an excellent IT infrastructure, and there are lots of market participants, they have a okay infrastructure. So yeah, this is basically what I just told you. So DORA is next to everything we already have. And it is quite a challenge for the market. I will go into a bit more detail when we look at the ICT risk management. So the ICT risk management is part of the whole ICT governance structure of a financial institution. And as Andrea just said, we have ultimate responsibility set out in DORA for the whole IT infrastructure and also for the management of all ICT risks. This is not new, but now it actually requires an even more expertise on the management level. So far, when we accompanied financial institutions during the application process for a license with BaFin, you always had to show expertise in the area of the regulated service the application will be granted for. So for payment services, you needed someone who has already experience in the payment service industry, and so on. You needed someone for risk management. You always need someone for risk management. But now, due to DORA, the focus is much more also on the IT experience. And this is something, it is not entirely new, but the focus is now it has now shifted, or it is focus is added, I would say, because the other qualifications are also needed, still needed, but the IT is now much more of focus. Yeah, what is an ICT risk? This is everything that encompasses every IT risk that compromises the security of the network and the IT system. So this is actually quite easy to understand. Every cyber attack is, of course, an IT risk. If data, if any data gets lost through IT, it's an IT risk. So I think this is kind of a no-brainer. And also, if we look what DORA provides for the IT governance, which arrangement and which processes we now need, it is also not new. I mean, it sets out, it's Article 4 of DORA, it sets out that there has been ensured a clear allocation of roles and responsibilities for all IT functions. The risk tolerance level of the firm needs to be determined. You need appropriate resources for dealing with digital operational resilience. You need training for your staff. This is all not new. This is also something you will find in this BaFin publications on BAIT and so on. But it is much more granular now. So the requirements set out, and even if we also have in DORA the proportionality regime, or the principle of proportionality, it's much more granular set out than we have this today. And also, if you look at what the management board is now required to have in writing, all these policies, this is also not new. Of course, every financial institution has a business continuity policy. Every financial institution in the market has a disaster recovery policy. This is also not new, but they now have to check, does our policies that we have in place also fit all requirements from DORA? And this is really a challenge, because it's not something entirely new where you can set up new processes and you do this from scratch, which is sometimes quite easy or easier than to find the gaps between the current setup and the new regulation. So, and if we now have a look at the key pillars of the risk management framework that DORA provides. This is in Article 5, and Andrea already told this in the last talk. I mean, this is all actually what you would expect in a risk management framework. This is also in EMA risk set out. You need strategies, policies, procedures. You need to identify your tools. You need to understand the tools you are using. This is also in practice something that not every financial market participant actually does. There are then some people in the IT department who understand the tools, but the management body very often does not. So this is where I said the focus is shifting also to the management board. So you need an IT security management. Most of them, I think all of them actually have this. You need segregated IT management functions. You need a control function, a management function. You need internal audit that also has a view on the IT management of risk. So then you have to document everything. So this is all not new. So every financial institution has this in a proportionate way. So the smaller your financial institution is, the less they will have. They will also very often have outsourced some of those functions. And I'm also not sure if every management board of the smaller institutions actually know the details of their IT security framework. So what is now new? We need a written digital operational resilience strategy. And even if it does not say in DORA specifically, you need this in a written form, you actually need it in a written form, because the auditor will have to understand it. The auditor will look at this. The auditor will then report this to the National Competent Authority in the end. So you need this in writing. It has to be specific so that it actually can be audited, and it needs to be in line with the text of DORA as such. And at the moment, we see in the market auditors who are very strict, who are very much providing audits on the text of the regulation. I think this is all due to the Wirecard drama, I would say, Wirecard drama. So the auditors are at the moment very, very picky, and we accompany lots of clients also during their audits, where the auditors ask some questions and they do not really understand the legal setup and also the proportionate requirements, and that every institution can actually decide by themselves how they want to do the process or the strategy, how they want to set it up. So it is really very important now for every market participant in the financial market that they do a very good job and a very diligent job in setting up a digital operational resilience strategy in writing as part of their risk management framework. So this is also something that we already saw in Andreas' presentation earlier. I would like to just give you a practical view on this as well. So I think in practice, every institution now has to do this gap analysis I already mentioned. And the challenge, and this is also the challenge for us as lawyers when we advise on this, the challenge is always that the financial institution itself needs to really understand in detail how their current IT setup works. And only if you understand how this works in detail, you can then add the new requirements that DORA provides. And there are, of course, the people in the IT department, they do understand the IT infrastructure, but they do not speak legal. They speak IT. And this is really a challenge. It's not only a challenge for us advisors, it's also a challenge for the management board. So I'm sure it can be tackled, and it will be tackled, but it is not that easy. And also, if you compare the text of the BaFin publications in BAIT, KAIT, and so on, to DORA, it is. So I tried this yesterday evening when I prepared the seminar to give you an example, and it's really not that. It's not that easy because it is structured in a different way. So the BaFin circulars, it's structured in a different way than DORA. Then you have to find for every paragraph in the BaFin publication, you have to find the respective DORA article. I mean, this is something you can of course do, but yeah, the wording is different, the language is a little bit different, and then DORA is much more specific. So what will probably happen in the market is that the financial institutions will no longer bother with the BaFin regulations, although they are of course already in place and in force. They will try to just move their whole IT infrastructure to the DORA setup. So and then find ways to to fulfill those requirements. And DORA is, as I said, much more granular, much more specific. And also we have this proportionate principle in DORA as well. It does not really show in the, so it is set out in the beginning of DORA, but it does not really show in the articles of the risk management framework, so article 5 to 16. If you read through this, it just says that the institution needs to have this and this and this. They need to identify and classify and document all their IT risks. It does not say in these articles, you can do this in a proportionate way. And if you do this in a proportionate way and you do a little bit less, because your business model is a simple one, you still have to explain to your auditor and also to your national competent authority why you are doing it the way you're doing it. So you cannot only implement your view on DORA. You also have to explain it. And since the auditing business and the auditing companies are currently very, very strict, you also have to put, as a financial institution, you have to put some effort also in the explanation why you do this. And where would you do this? You would do this in your policies. You would need to amend the policies you already have. And in your policies, you would also explain why you're doing it this way and not another way. I will go through this. So this is, I will take this as an example. We already have also seen this in Andreas' presentation. The reporting of ICT incidents is something that is also already set up. So any major incidents you need to report, specifically in the payment industry, we have quite some guidance from the regulators how they expect us to report IT incidents. So this means, from a practical point of view, you need a process, and then you have the reporting on top of this. So you have to first install a process. How will I set out my incident reporting system? So I have to identify my incidents. So, and this is something we already have, but not in such a granular way as DORA sets it out. So I mean, major incidents is, of course, cyber attacks, but it is also if some IT servers crash, data gets lost, whatever. We have electricity, we have an electricity failure, whatever we can have. And then if it's a major incident, it needs to be reported. But also any minor incident also needs to be looked at. So we need to have rules for our staff in the financial institution so that everyone understands what are IT incidents in my business model. And it is not always easy to get answers to this question. So, for example, when we help financial institutions or payment institutions to apply for licenses, which we often do, we also have them set up all policies and procedures. And since we are not the IT expert, there's usually some other advisor who advises specifically on the IT. And then you ask them, what are the IT incidents? What can happen in your business model? And then sometimes there's all these generic things, but there are cyber attacks, whatever. But it's also an update fails on the system that provides the payment, or that transfers the payment order to the bank. There are so many smaller incidents that can happen, and it is not always easy to get all those informations from the project team that is involved with setting up the IT process, for example, or the legal department or whatever. So this will really be a challenge for every major bank, for every large financial institutions that have not just a simple business model, but they have several business entities, and so it's this is really a challenge. And what I wanted to show you is when we as lawyers read such a text like DORA, we just read it as lawyers, and we see, okay, you have to have this, you have to have this, you have to write a policy, it needs to be everything needs to be involved. But it is so much more for the financial industry than just the text. So there's really a lot of work, really a lot of effort and time needs to go in this. And then this is not the only regulation that comes this year, next year, but is one of maybe 4 major regulations we have, like MiCA, we have the ESG regulation, we have so many new, we get PSD3, we have so many regulations at the moment in parallel that I really understand that the market is aching. Also, this is obviously a very important one, since cyber attacks actually are even more frequent. So, and the testing is also another example for something that is not entirely new, but now different and on a much broader scale. So we have had stress testing for many years. So, but stress testing was not primarily on IT risks. It was primarily on operational risks, on market risks, and so. And now we have a testing program installed in DORA, which provides testing for digital operational resilience. And everyone will immediately understand why this is important. But still it's new and it has to be on an annual basis. So this means a lot of effort, and this also means a lot of effort for the IT department. So if you are into IT, I think your job will be very secure for the next years. And every IT person will be sought after in the market for the next years. And in addition to this, I would say the usual or the normal digital operational resilience testing, which you do annually, you have an advanced testing every 3 years on top of this. So this is, of course, also something that is important from a market perspective, and also from the perspective of the of all the investors and the clients of the financial institutions. We all immediately understand it. More and more of the financial industry is based on IT systems, so it does not even work without IT systems. And of course, those IT systems need to be secure and resilient. So that makes total sense. But still, it's a lot more resources are needed for this. In every financial institution, actually. Let me see what I have written down. No, that is fine. So, and another thing that is from a market perspective, the most, I would think, the most influential part of DORA, or the part with the broadest impact on the market, is that every financial industry now has to manage also their third-party risks. So, as I said, lots of IT services are outsourced. Of course, there are lots of cloud providers that are widely used in the market. There's, of course, all the large ones like Microsoft, Amazon, and Google. they are used widely throughout the market, but there are also smaller ones. Yes, and the challenge here is that now the management board, but not only the management board, also the outsourcing, the people responsible for the IT outsourcing to a cloud provider, as an example, now needs to be aware how this IT provider manages their IT risks. And this is something that will change the market completely, also from a perspective of the IT providers, because the IT providers, and specifically the large ones, are not very keen or at all interested in sharing their IT security parameters, because they say it's a trade secret. It's our it's part of our business setup. It's part of our business model. We cannot have this public in any way. We do not want that our competitors know this. There is a huge risk from a perspective of the IT provider, there's a huge risk that some of their IT processes will become public. Yeah, and so we have, for example, we have huge discussions with IT service providers that do not want to provide their IT security parameters in detail. And now DORA comes in and requires that every financial institution that uses an IT provider also assesses the risks that are connected to the IT provider's IT setup. This is a very, very huge challenge, and it is, from a regulatory perspective, it makes total sense, because of course also the market, the whole financial market, depends on the IT securities of those cloud providers. Just as an example, there are other providers who are also providing vital infrastructure for the financial industry, but with the cloud providers, it's a bit easier to understand. So, and now we have in DORA this requirement that third-party risks also need to be managed. So I think there will be lots of discussions ongoing when drafts of the RTSs are published, and so on. And if I just go here, this is also something Andrea already mentioned in his call. This new oversight regime for the national competent authorities, but also from the ESAs on a European level on critical IT service providers. This is something for the European market that is really new, and this is something the IT service providers are not keen on. So they are completely, yeah, what shall I say? They are not only not keen on this, but there's so much interest going on. But I think that the IT service providers, the critical ones, do not have a great lobby at the moment, and the regulatory lobby is prevailing here. In Germany, we already have oversight of BaFin on outsourcing companies. So we already have this in Germany. It is also due to the Wirecard drama, and this so-called Wirecard Act we got, I think, 1.5 years ago. It says now in the Banking Act, and I think also in the WPIG, that we have that BaFin has oversight also and can request information from the IT service providers directly. It is not widely used at the moment, but what we see in the market is that BaFin pressures the financial institutions much more to get more information on IT security, and to get this in writing, to get copies of documents and so on. So this is something actually new and something that happens in Germany, does not happen in other member states at the moment. But this will change. So we are in Germany, again, early adopters and doing a little bit of gold plating here again. But this will come on a European level as well. And the IT service providers will need to deal with it. So they have now a little bit of time, as we've also seen on Andreas' slides. Yeah, but this will definitely change the scrutiny the IT service providers are under in the European market. Yeah, and this is where we have, for example, we have Tellerwessing as a firm. We have lots of IT service providers as clients, because we're kind of an IT firm. Yes, and they have lots and lots of questions. They usually have questions on outsourcing anyway, and now they also have a lot of questions on DORA because they are not used to this scrutiny themselves. They usually try to agree with the firms, with the financial institutions on the terms, and the outsourcing agreements basically are quite balanced between the interests of the IT service provider and the banks or the financial institutions. And now that the IT service providers will also be under scrutiny of the supervisory regime, yeah, this will definitely change the market, and is something that we should always bear in mind when we talk about the IT risk management in the financial market. I think. So the main, I have one other slide, but this is something I think we do not need to go into detail because we already had this in an Andreas presentation already. I think the main takeaway from a practical point of view is that we have on the one side the internal risk management that needs to be done in a DORA compliant way by each financial institution. And this is quite a huge task already. And on top of this, we also need to manage this third-party IT risks as well. And this, I would say, is probably an equally huge part of the implementation process for each financial institution. And in particular, if we think on the outsourcing IT providers, it's not only that we have the outsourcing IT providers, we also have sub-outsourcing companies. And sometimes we have 2 or 3 sub-outsourcing companies. And all those sub-outsourcing companies will now also be covered by DORA. Yeah, and this is really a huge challenge for the market. Also, from a security perspective and from a resilience perspective, it is obviously the right way to do it. Yeah, but just bearing in mind that for us, from a legal perspective, it all seems so very clear. But from a practical perspective, and to implement processes and policies accordingly, it is really a huge task. So I think. I have one more slide. That is good. This is what we usually tell our clients. They need to stay up to date and they need to stay up to date. They need to also stay up to date with the RTS developments and all the consultations that will come. They need to do lobbying work if they want to have a say in this. Actually happening a lot. They have to leverage the existing framework. This is what I said. They have to do the gap analysis. They have to see, do I need more staff? Do I train my staff differently? Do I need to install another management director, whatever, some other person in the management board that has more IT experience that we already have? Yes, and then they need to start very early with the preparation of the implementation of DORA. And then we have the challenge, but that we have with every new regulation when it comes out. You want to start as a financial institution, but then the RTS are not final yet, or the RTS are going to change, or BaFin will have a different interpretation of some specific term and so on. So what we usually tell our clients, just start the implementation process and then stay flexible. And in the beginning, if you do not have the guidance you need for any terms you need to interpret, just do it with common sense. So this is what we usually tell our clients in all contexts of implementing new regulation, and I think it will be the same here. Also, I think it will be a bit more challenging because we have now the IT guys involved, and as I said, they speak a different language than we are speaking. So there's also the language challenge involved as well. So yeah, that's it. That is my overview.